Hi guys, welcome back to my investment channel in YouTube channel. I would say specifically. So for last week, I made a very short video to talking about. Just more about introduction about myself, and I have a lot of positive feedbacks from people and from the people I haven't connected for a long time. So today I make another video to talk keep to the talking share more about the investment knowledge. But before I go to detail, I just want to mention a few seconds about the name of the channel. The channel I just created, it's about the investor journey. So why I really like this name, because it's, to me, it's investment is a long journey. You have to think about it's the long process to get there, and on the journey we will get failures, we will get ultimate the success based on the criteria. For example, the the think about the financial freedom. That is, to me, is the ultimate goal, because I after some certain stage, I really want to devote myself for the thing I love, and I think is meaningful for my cycle and for community. Okay, so today is today video is more about the investment principle. So why? So I think it's the first thing you should think about when you are the approaching a stock investment, because principle is something, it's guiding us in the tough and good time. Because for me, for last 5 years, I have go to very major deadline stock market. For example, 2018, when the US and China trade war started, stock market dropped like anything, more than 20%. And in the most recent thing is a coronavirus, right? It's a March. You can see it's the stock market deadlines. It's very sharply, one of the sharpest in the history of the stock market. So it's that is that. So when I look back, so what is the thing it guide me through that tough time? I think about the principle I follow. So today, that's why today I would like to share with you guys those principles. Okay, the first principle there are five principles I want to mention today based on my experience. The first principle is about the mindset of owning stock. Right? Most people will thinking the owning stock is about the some I mean electric some simple electric beep beep in the stock market. But for me, it only stopped about the owning business. You have to think about that. So when is you're thinking about when you think the owning stock is about the owning business, you will care about the different aspect when you come to investment, right? You care about the business model. You care about management. You care about product leadership. You care about financial process in a company. So that's kind of aspect when you care about when you thinking about the business as a owning stock as a owning the business. But if you if you if you think about different aspect, if you're not thinking about that, you will think about the different aspect of the other side of trading. For example, is a moving average, 10, 50, 120, or the ISI, the Stockholm Moses kind of thing. And for me, is the illness. It tells nothing about business. So that's why that is number one I want to emphasize here. Number two, about the think about the market price and the intrinsic value. Market price is the price we are trading every day. That is we call market price. But intrinsic value is the real value of business, right? So though, and that two number usually different based on the mood of investor, right? Sometimes people is optimistic, too optimistic about future. They can pay massive price for that business. But sometimes people, have very, pessimistic future. For example, is in March coronavirus, people just dumping stock, and and is the and the stock price become very cheap and it's much lower than intrinsic value. So if you buy at the time you have very decent return. So that's why I want to emphasize that two things: market price and intrinsic value. And how we calculate intrinsic value, I will show in the further later video. But today I just go to the principle only. So yeah. So next, number three is about the price is what you get, what you pay. Sorry, price is what you pay, and value is what you get. You pay too much for the stock, you will get no return in future. It's no doubt about that. For example, if, and it's correct for any type of investment, not about stock, even in real estate. Even if you buy it in the bubble time, right? The return future is very low. And the bubble time, when you realize bubble time is when everyone talking about it. The same thing with Bitcoin or the real estate or whatever. And number four, margin of safety. So margin of safety is one of very central concept in the investment, because value of the stock today is all about the future of cash flow that business generate in the lifetime of business, right? Some business can exist for a very long time. For example, Coca-Cola, over 200 years, right? So think about that. But the future cash flow can be very certain, depending on many factors. For example, macro environment, and for example, even leadership of companies change, and it's have the execution problem. So it's gonna be certain. We never sure about that. So that's why we always have to apply some certain margin, right, to mitigate the risk of that kind of thing. So that's why I always try to apply the margin of safety. So for me, it's a good number is 30% and 30%. For example, when I calculate the intrinsic value of business is 100, I apply the margin of safety is 30%. So the good entry price for me is 70. If the stock price come to 70, definitely it's a good entry for me. So I buy it. And the last thing is number 5 is about the human behavior, because human behavior, if you read about the Ben Graham in the Intelligent Investor chapter number 8, you will nowhere can describe better than that than Ben Graham. The book is written is 70 years ago, right? So because a human is have emotion when he's excited about something. For example, let's say about the 2000 when the dot-com bubble burst, right? Before that, it's the massive run-up of the internet company. Every company with the tag name internet, it's no revenue, no profit, but it's worth billions of dollars. So in the end, all this crap shit, it just gonna burst. and only few company you can see today is Amazon, Google. It's an internet company success today. So, but this at that time is gonna be thousands of companies. Even you can see Microsoft, right? Microsoft very very good company, right? Revenue is increase almost every year, and profit also increase, and the market price is almost monopoly. But if you raise the price Microsoft in 2000, you have to wait another 10 years, 2010 or 2012, to get to where you are in 2000. So that is a massive difference. For example, Intel, right? Intel now it price in 2000. It's same price today. So it's even Intel is good company. It, I mean, revenue and profit mostly increase every year. But you see, in 20 years, lost is a lifetime business. So it's never overpay too much for stock, because if you pay too much for stock, your return is very low, and it's a lot of chance of losing your money, because you can't because if you jump, you have a chance to hold investment for a long time. But you are, I mean, not young, you are, I mean, 60 or 70, right? So you cannot wait for that 10 or 20 years to get a stock whether you back to the, I mean, where you were, right? So that, I mean, that is five principle of the, I mean, I think it's the core principle, I would say I want to share today. So hope you guys find it interesting and meaningful for you as a journey of investment. So in the next video, I will go further detail about some of the basic knowledge about investment. For example, I mean, where one started. I will talk about the easiest to the, I mean, the step up with our investment. For example, investment in the mutual fund, ETF. I will detail in the next video, and I have planned to make a series of videos all about investment. Okay, so that's all for today. Thank you very much for watching, and if you like it, just subscribe and leave a comment. I will find my time and to answer on my all the best, because I don't know everything. I cannot know everything. I try to learn and improve myself every day, every single day. Okay, bye bye. So see you next time.